Welcome back to the channel. I almost feel out of practice and I missed you all very incredibly much. As you can see, I am barely set up here in Miami, Florida. This is like my first or second week really here. Finally kind of setting up in this apartment studio we built out here. And I'm hoping this all works. But just stay tuned. I know today we're gonna do a ROIC only session. I wanna do another ROIC only session on Thursday. I am in a complete rethink with the team about what to do with the YouTube channel. After meeting some of the cool YouTubers here at the conference, they really gave me some tips. You know, I'm not really a natural YouTuber. I'm using it more as a distribution channel for some of the research we do here together as a community. So, I'm rethinking everything, but don't worry, the focus will always be on ROIC numbers. As you can kind of tell, I haven't really done many real videos for a while, right? Like it's been like a couple months now, but I've continued doing the ROIC only streams, continuing on ROIC, and that's really the main focus. So thank you so much for being here, hanging with us while we have some scheduling changes as we move. But I promise it's gonna be better. I feel like the scenery is already better. In case you get tired of my face, there's like a cool view here. So yeah, that's a fake plant because for those of you who like the plant, that's a plant because I'm not confident in my ability to keep one alive. So yeah, let's look at let's go through Morning Sense today. I think eventually maybe I want to do I'm thinking about doing a daily show for ROIC members. And so I just want to kind of get you up to speed for the day. The markets started up slightly up. Let me share my screen. Started slightly up. It's slightly down now, kind of trading down a bit. But nothing too much, right? You kind of scroll back 3 months. We've been in quite a holding pattern for a while on the S&P. It's been pretty flat for a long time. Just kind of looking at the big board here. You know, we are up as of today with TIGR falling today, 67% up. But I was peeling back the onion here. And, I was like, okay, so we're flat. Markets are generally flat. Kind of performing with the market and recovering somewhat with ARK Invest because we are growth oriented. And then I was looking over at our sector allocations and, also in the scheme of things, crypto's done horribly through this period of time, which means that for us to basically, trade slightly flatten up, as a big board, we've been meaningfully outperforming on our stock portfolio. And as of today, as of this morning, as of 5 minutes ago, the ROIC big board, just saying the stock and cash portfolio, so kind of not even including the cash part, is up 20% year to date. So crypto has been really doing poorly this year, and we've been doing really well. So hopefully we can keep this up. And this is the reason why I really wanted to keep this channel and make this content and make ROIC and make this website. And it's the reason why all my hedge fund and private equity friends, who are all like directors, MDs at this point, and some VPs, they would love to give me their money because it's not just, I feel like people go really deeply into crypto and then they're susceptible to the ups and downs of whatever Bitcoin's doing at any given point, or people go all into stocks, and that's a whole world, right? Like whether you go super high beta or you go super esoteric, deep value types of stuff, and that stuff is kind of through the markets. You don't really know what's going to happen. And you can be right about the single security, but you can be kind of wrong in the midterm about the macroeconomic effects. So the reason why, what we're all about here is staying relatively diversified in our concentration. We are pretty concentrated on the big board, as you can see, right? Like it all fits on a page. And honestly, this might be even more diversified than I would prefer to be. But we are diversified enough across innovative asset classes to provide some level of stability to our community and to our portfolio. So this is what we will call our flagship fund at some point here. And I think it provides like my management style will provide incredible returns, risk-adjusted returns to people who want at least the optionality of 2 to 3xing their money over some reasonable period of time. For those with a 10 to 20 year view. And so that's the reason why I'm not selling Bitcoin, right? And that's the reason why I think we're going to, and we do have the best community. I got to meet a few ROIC members at the conference. They just came up to me and said, hey, I'm a ROIC member. We got to do some meetups. That was my favorite part of the whole conference. As you can tell, my voice is a little bit gone. But yeah, that's the reason why we're going to beat everybody else, is because we're not super dogmatic about anything, right? I mean, there was we'll address the question request board later in the show or later in this stream. I'm not super dogmatic. You all know, like, whether it's politics or investing, like, I am a very see both sides of the coin kind of guy, and I just like being analytical. And if someone brings up something then proves that I'm wrong, like, I'll change my opinion like a drop of a hat. And so that means that but I do have strong opinions, right? And it's like that, hold strong opinions loosely, right? And that's definitely a philosophy that I really like. And so that's why the portfolio is structured in the way it is. I hold strong opinions, but I hold them lightly. And I like a lot of different innovative things, and that doesn't preclude us from doing crypto or real estate or stock. So we'll be building out all that stuff. But I mean, I am very happy with our performance. If you're just a stock person finding this channel, right, and finding ROIC, and you've just been following the stock portfolio, you're probably doing really, really well. If you bought Bitcoin with me, you're doing well, right? If you found me back in the summer, we were buying Bitcoin back in like the teens, right? So you're doing really well. And then I finally did a Bitcoin YouTube video at 18,000 after we had already bought it. So don't cry over spilled milk. I mean, yeah, it went to 60,000. Now it's down to 32,000 as of today, as of right now. But again, this community is supposed to be here with us at least 10 years. So we're going to go through a couple more of these cycles. And like I said, you weren't with me when I invested a lot of my own personal wealth at 15 to 17,000. And then, at some point that Bitcoin went down to 3,500. I mean, that really hurts, right? So going from 60 to 30, doesn't hurt that much. Now, do I think, kind of coming out of Morning Sense today, do I think, let's address the elephant in the room on the crypto side is coin market cap. Let's go to coin market cap. Am I out of focus? There. Okay. Yeah, so it's down 12.5% today, right? And it's under it's 31,000 now, and kind of really selling off quite a bit. Well, like I said, you don't get meaningful upside without meaningful downside. There's no such thing as a free lunch, right? It's the volatility question. And if you kind of zoom out here, I mean, quite possibly, maybe we do enter a crypto winter, for sure, maybe. But the goal of this long-term portfolio, right, 10 years plus, is we can handle that. And as long as even if you bought at the top, and I will say I bought more than one Bitcoin at 16, 17,000 near the top, you still do very, very well. As long as you're right about the fundamentals and the adoption of the viral network. So to me, for those of you that found us late and we're buying up here, I think we enter in right now a dollar cost averaging strategy, spreading the averaging over possibly a couple of years right now, just because we do know that in a crypto winter, the downside is a lot more intense. But that's just looking at price action. I did write in Morning Sense today, after going to the conference, and I don't know what everyone's saying on social media. What everyone's saying on social media about the Bitcoin conference, it was actually kind of 65-35 male-female, which was very surprising, maybe 70-30, and a lot more professional than I was expecting. Yes, there were a lot of just kind of folks that bought Bitcoin, and made a bunch of money and wanted to partake and like give back to the community. But there were also a lot of really legitimate companies. TradeStation is a legitimate platform that is finally getting into crypto. And I'm talking to them, and like I've mentioned, I'm gonna be putting hundreds of thousands of my own dollars for you on the website, because people are like paper portfolio, Justin portfolio, like whatever, right? Like I've scrounged up, or not scrounged up, I've allocated some of my dollars that wouldn't have tax implications, right? And I'm going to show it. I need to find a platform that has an API that I can like push through the website and all that stuff. But TradeStation is like a legitimate platform from Wall Street days, right? And they're finally getting into crypto. I mean, that's just one of many, right? There were payroll companies. It was not as big as some of the healthcare IT conferences I've been to, but it did feel and have a lot of that professionalism. But also some of the quirkiness too, like NFT artists, like a lot quirky. It was very eclectic, but had a lot of corporate sponsorship too. So I am way more bullish today than I was in 16, 17, 18, 19 about the actual adoption and implementation of the rails and the infrastructure. So, you know, the price action is the price action. That crazy neighbor that comes and talks to you every day will only give you opportunities. So if you didn't go all in at 60 and you still believe in the $500,000 story, and you believe that the momentum is there, and we're gonna be releasing a few more videos on the YouTube channel from the conference, and you tell me what you think. I mean, no bias, right? I'm not even editing them anymore. And you tell me, and if you still believe in it, right? Like you kind of look at the upside downside, right? And what I said is, even if you bought at 50, 60,000, like don't feel bad, right? You're still investing for a 10x upside. Now you're investing at a 20x upside, right? So just do that at your own will. You know, markets are mixed today. Let's show the screen. We already went over the markets yesterday. Cyclicals underperformed. Tech outperformed. European stocks were moderately higher yesterday. Asian stocks were weaker overnight. You know, lots of economic reports about real world job growth, with job postings almost 30% above where they were last year. And traders are betting on $100 oil, which is what I think is interesting, and it's something, you know, I posted on TikTok a year ago about buying DBO, which is like an oil fund, because, you know, I'm not really, you know, I'm not a commodities guy, and I'm not like an oil analyst, but I mean, we, you know, just for fun TikTok days, really bought a little bit of DBO, because it kind of made a lot of sense. Like, people aren't driving, it's a pandemic, but eventually people will drive, and oil has like kind of intrinsic commodity value there. So I think that's what you're saying is you kind of go out 3 years, you know, it's normalizing to where oil's price should be. So if you kind of go here, sorry. Oil is normalizing to its intrinsic commodity value, right? And yeah, and Ann is asking in the chat, what do you think has caused the big move up in TIGR? Let's look at TIGR. I haven't, you know, as of yesterday, they're down today because they announced a stock issuance, just like FUTU did, right? And FUTU, you know, I think investors don't like dilution, right? Because you own less of the company. But there's something called accretion dilution. So if something is net accretive, that means that they've used that money to increase everybody's wealth. And dilutive means they've used that money poorly under their cost of capital and wasted the money and actually did a disservice to shareholders. Now, both FUTU and TIGR, to me, are coming out as a duopoly-ish, but one is much bigger than the other, of Chinese-speaking investors investing in American and Western stocks. And being that Robin Hood for the Chinese-speaking investor, I think that's something, you know, we've done a lot of analysis. You can read a lot of the analysis. We've talked about it ad nauseum on the channel. And to me, we deal with 10% up days, 10% down days on TIGR and FUTU all the time. not only do you have the fact that they're not hugely traded ADRs here in the Western world, but you also have the volatility associated with the Western investors investing in Chinese companies, right? So when Alibaba goes down 2% and the government-wide crackdown on Chinese tech companies, if Alibaba's going down 2%, TIGR and FUTU are going down 10%. Now, similarly, I think this is what I love, right? It's a fundamental story. These companies are growing like crazy. It's not super complex. Like I did the math. It's not super complex. And all it really takes is people to realize and cover the company and say, holy crap, these companies are trading at like 10 times forward gross profit and they're growing at 100, 200% year over year. And even normalized, let's say it's 50 to 100%, right? As you start comping against last year's comps. I mean, that's a steal. You hold this thing for 2 years and it just continues on its momentum. Let's just say it's fairly valued, right? And a company is growing at 100, 200% a year. Eventually that growth is just, you know what I mean? Like at any given point, Apple was fairly valued. At any given point, Tesla was fairly valued. But if fundamentally the company grows and compounds on itself, like you can get return on just cash flow. And I love these Chinese companies too, because unlike the Western world, they run themselves much more profitably. So TIGR's done incredibly well, going from like $15 to $25. Truth be told, we were buying in the 20s, like low 20s. So I think we're finally starting to get to profitability here. FUTU's been profitable. And I just think it's more coverage. Yeah, FUTU we're doing really well in. And so obviously that's been doing really well for us. So that's that. Other stories I really wanted to cover. Let's kind of scroll through Morning Sense today. Apple, there was a lot of events on a lot of different things on Apple, but lots of, WWDC 2021. I kind of read the Verge summary. Go watch the 23-minute summarized video from them if you're interested. Look, the big thing is, to me, I really wanted them to come out with a true desktop OS for iPad now that the M1 chips are equal. I had a really hard time picking for something portable since this is like a really gigantic gaming computer. If I were to write Morning Sense in a coffee shop or something lighter, right? And I can't do that on an iPad because I need the whole multi-screen, and it just. I think that was the big takeaway, and I think you can watch some of the other YouTubers, the tech YouTubers, say the same thing. And the other takeaway to me was that Zoom has yet another competitor, and I did see a response tweet at my tweet about how Apple is coming out with FaceTime on desktop for Windows, Android, and having FaceTime be an actual client. So Apple themselves as a company uses WebEx, which is atrocious. It's an atrocious piece of software, straight out of 2005. Worse than Skype was back then, right? I don't know if you guys remember Skype. I don't think anybody uses Skype anymore. And and so internally, you do know that they want to get off of WebEx, and they have really good, really great, slick software with FaceTime. And the response to my tweet was very much well, they don't have single sign-on. They don't have single sign-on? You think that's the reason why people make decisions? Have you ever heard of BlackBerry and iPhones? I don't know. Maybe the person's 12 years old, but I remember the argument against BlackBerry has such a big moat. Apple iPhones are fun and they're for consumers, but they'll never break into enterprise. How did that go? Let's not even waste any breath on that. How did that go? Didn't go too well for BlackBerry. So if you're hanging on to a thread about Zoom about single sign-on, and a couple other like enterprise features, and you don't think Apple, Apple, they have enterprise. Like most enterprises use like iPhones now, like they don't use Blackberries. So we're going to move on from that. But those were the two main takeaways. I think the big news that I really want to call out was Ford unveiling the Maverick, a compact hybrid pickup truck for under $20,000. And hybrids are really great. They get like 40 to 50 miles a gallon, maybe. I don't know about this truck, but like definitely the hybrid Camrys get a really great mileage. And they're just generally great. And for most people, for those of you that haven't heard of the Honda Ridgeline, I know truck people hate the Ridgeline, but it's basically a Honda Pilot with a truck bed. Excuse me. Talking to a lot of people at the conference really got my my vocal cords all ragged. The Ridgeline, and most people that use pickup trucks really, really don't need the torque. They just need to like tow something, or they tow some things and put some things in the truck bed, take out like their boxes and all that stuff, right? That's how I would use a pickup. And a lot of people buy the F-150. It's the most popular truck in the country because it's not so embarrassing with truck people, right? It's like a very standard truck, and it's pretty useful. So I really like this move on the Maverick, and the second release, not only the F-150 Lightning, but the Maverick, kind of a Ridgeline-y hybrid, really shows me that they have some resolve in electrifying the lineup. And I personally like the valuation at like $16 a share. They're like 10 times forward EV to EBITDA minus CapEx. So if you believe that their CapEx is inflated right now, trying to invest in electrifying the lineup, and they're committed to releasing really good, like to me, the F-150 Lightning is just a good product. It's a really good product. Like I know a lot of people don't want the Cybertruck because it looks so crazy. So I really like the resolve. I really like the product, right? What is a company if not its product? Like the way I differ from the classic Wall Street folks are classic Wall Street folks focus on the financial engineering. Silicon Valley folks focus on the product engineering, okay? And I think going too much on either side makes you miss something. And to me, I lean much more towards the West Coast style of thinking of what is a company? It's its product selling to its customers, not its financial engineering. That's what I believe. So to me, like 10 times cash flow valuation. And if you believe that these investments, inflated investments, so lower cash flow than run rate, and you believe that they find some semblance of growth and market share gain because they've been really like struggling in the past. I think Ford can be a slam dunk. For the big board, I will probably wait on this one a little bit just to get it a little bit cheaper maybe, but I don't see a reason why this isn't a good, interesting stock. So I put it interesting for now because I would love it a little bit cheaper. You look at Ford right here, right? They're 10 times Ford or cash flow-ish, right? And they've been trading for under 4 times, which is so cheap, but we had no visibility in the last 2 years that they were going to turn things around because they've been struggling. Like they were declining in revenue, right? These are times of like distress. So, and they've been flat before that. So if you find in yourself to believe that these product moves are good and that they can produce and execute upon them and actually grow revenues, it's a complete game changer for the business and the company, right? And it's a pretty simple story, especially with my time now, like being a content creator and building a business and doing videos and like all this stuff, right? Like I don't have the luxury of being a pure analyst anymore, right? Like a pure analyst would spend hours and hours and hours researching, doing the financial engineering analysis, and then and then writing it up, and then you get one piece of content every like couple weeks, right? I don't think that's necessary to outperform personally as an individual investor. I think you just like, I know how to do all that stuff, but it's also like, I don't know, some of you are software developers. I would imagine it's like knowing which software companies are going to do well. You don't necessarily have to go through the code, if that makes sense. So, for those of you that missed it, CNR has been ripping, right? CNR has been our best performer in the last quarter. And we bought in CNR at like 14.88, and it's almost $20 a share now. And let's just kind of look at the news together. I think just generally, get all these calls. You kind of look at this agreement. Hold on here. So Cornerstone Building Brands entered a purchase agreement with Nucor and Volcraft Canada to sell the company's panels business for a purchase price of $1 billion in cash. So, I mean, I think this is for a company that, let's just kind of refresh on this one. For a company that is a $5 billion company, and at the time, $4 billion company, and you're selling, not 1/4 of your revenue for 1/4 of your valuation, that's a pretty darn good sale. That's a really good sale. Let's just kind of go through the releases together again. I've been at the conference, so it's been a bit. Signed definitive agreement to sell insulated panels business, accelerate accretive growth opportunity, so that way they can use a lot of that cash to pay down debt, and also reinvest in the business and buy other brands as well. Let's see what. So this was just an announcement, and So I just think it. Hold on. Let's go to the queue. I'm just trying to catch up on their segment data. Windows and siding, commercial. Yeah, it's kind of what I remember. They don't split out their panels business, the specific panels business. So we don't know exactly what at least on first glance, I don't remember what the contribution is, but I do know it's much less than 1/4 of the valuation, which implies accretion, or than the EBITDA. So I'll probably spend some time this week to kind of dig into this. And so this one, I will say, we're riding on this one. It's really good. I don't necessarily want to sell the stock. Pre asset sale, we had like a mid-20s valuation target on it. So if this is accretive, it would only increase that price target. So after I do my work, but my hunch is that the price target is actually more like 30 now, $30 a share, 25 to 30. So I'm not selling right now. I just got to do the work and see how that affected it. But I think the market loves it. It's accretive. They're selling at a premium. And so let's see if they can use the cash wisely, right? Okay, cool. So let's okay, so we started at 11:30. Let's use our last 15 minutes to address this meeting pulse, honestly. I may cancel my subscription. For those of you that saw some of this, hold on. You got a few of you called it bottled. Yeah, so some of you some folks have been gaming the system, I guess, by making a bot and upvoting. Okay, man, I feel like you got too much time on your hands, but let's read this. Let's read this one. I didn't like what Justin said about Pershing Square, Tontine Holdings, and Morning Sense, which was a one-sentence thing. I said, I find it incredibly myopic, structured SPAC deal that could benefit him over normal investors with the financial engineering. This shows Justin has a lack of understanding on this topic. I have spoken with one friend in IB and another who works for a PE firm that has raised a SPAC. Both tell me Ackman SPAC is, whilst complicated, an incredible deal for shareholders. It's also incredible that people always forget the forward purchase agreements that Bill has, collectively putting in billions of guaranteed capital. And yes, I do know that that Andrew Walker at yet another value blog did post about this less than a day ago. So thanks for bringing that up. And I was able to skim this. And let me just say one thing. There's a reason why Andrew Walker doesn't do like YouTube and doesn't build this community like this, because this takes time too. And my philosophy is less about, it's the 80-20 rule, at least for now, right? I mean, hopefully we grow this thing to have real, like a team of real analysts, but those types of people are like me. They make over $500,000 a year, right? So, I mean, we've got like 4,000 subscribers or like ROIC members. Like, can't even afford one of those, right? And Andrew Walker, is going off on his own, and he's one of them, and I'm a former one of them, right? So the reason why you pay those people that much money is because they spend a month digging into the financial structuring and engineering, right? So my comment very clearly was much more like Morning Sense and financial news and call-ins and these upvoting questions. These quick takes to me are more like screens, and the screens are like pitches, right? It's a no strikes called baseball game for us, right? And so I'm trying to find, there are enough stocks out there and pitches like constantly every single week that we are finding great opportunities. We found CNR through a ROIC member who submitted CNR. We found AMD through me writing about it during Morning Sense and me looking at the valuation, me being like, that looks pretty good now, right? It's come down quite a bit, and AMD is a really great company. And AMD's up, 10% since we started buying it, like recently. AMD was our latest ad, right? So to me, I think we can outperform, and I can guarantee you I will put our big board performance, especially the stock only performance, up against almost anybody out there, right? And not to say that I haven't done as much work as someone who's dedicated a year of their life, or a month of their life pouring through the structuring docs on Pershing Square, Tontine Holdings. But at the end of the day, my comment, maybe it is myopic, yeah, but I think this is myopic. I think this is getting lost in the weeds, because I've said this a million times. I like investing in companies that are changing the world and growing and making products that customers want to buy, right? And not to say that Universal Music Group isn't a great company, but it isn't a company that I believe is super exciting on their own EBITDA growth. You can read this. I guess he made this one public, but he has a $500 a month or whatever it is, like $150 a month Substack, right? It's like multiples more expensive than ROIC. Let's just call that out. And for and he does these deep dives. You get you'll get one of these a month maybe. And he's saying, he breaks it down and he says the upside, the fair value, is less than $25 a share. Okay. So you're telling me I have to take Bill Ackman risk, who in the past has screwed over shareholders. Like, why don't you go read biographies about the guy, right? I respect the hell out of him, but I also know he's like a shark. And I've had to work with these people, like they're sharks. Like, they'll stab anybody in the back for their money, right? To maximize their own returns. And I'm just not like that. I grew up in Southern California. I have morals. I was a Eagle Scout. I don't think like that. And so I have to trust that guy. And I have to dig through. I have to be confident in a month's worth of work, or maybe 2 weeks worth of dedicated work to break down all this stuff. Look, so even Andrew Walker, best of the best. He ran his own, or what? I don't know. He's really good. He ran his own fund in Connecticut. He does all this work for the structure, And then someone says, I think you're missing the dilution from these other warrants, right? So even him, all this work, you're missing something because it's so complicated. And you're doing this for, I don't know, like 10% upside. That breaks my 80-20 rule. CNR got us over 30%. And it's a very simple story. And I lose multitudes less sleep on cornerstone building products. Like, why are we buying that? Why do we own that business? Versus trusting a not done SPAC deal for a 10% upside maybe, and maybe it's a 30% upside, I don't know. And for an incredibly complex thing, and Andrew Walker wrote in this letter, in this thing, he said, Ackman is running a burner Twitter. Hold on, let me find this. Hold on, watch this. Ackman is running a burner Twitter account with some mild profanity in the username, and he's secretly dropping hints about what's next for Pershing Square Tontine Holdings in my DMs. Okay. I'm sorry. I'll leave that alpha on the table. I think there's other alpha that we can go pick up, right? AMD, CNR, TIGR, long-term investor stuff. So if you want to go get your 10% bag over there, go ahead. Just, you gotta do your work. Even this is gonna take 2 hours to even read through his analysis, right? So, but again, maybe it does super well. But again, the way that we are building this community, I have neither the capacity nor the confidence to invest in the Pershing Square Tontine Holdings, which all distills down to my morning sense, 2-sentence write-up reaction of just saying it's not worth our time, probably worth someone else's time. There's alpha to be had in any stock in the world. There's alpha to be had in almost any financial asset. The question is, what's the alpha that's realistic for us to go get and maximize our time? So that's what I would say. Okay. But again, sure. If you really believe in his analysis, why don't you buy in Chipotle? Right? Isn't that his biggest investment? That's a little easier to me, even though Chipotle doesn't make sense to me either. And in general, I really don't glorifying people blindly following people, because at the end of the day, right? I think I was taught even famous, legendary people take shits like us, right? And what that means is, they're people too. They have 24 hours in a day. They're not deities, right? They're 24 hours in a day. The guy was a 15-year-old kid at one point, right? And the guy's a 30-year-old man at one point. And I'm not even talking about Bill Ackman. I'm talking about anybody. Carl Icahn, Buffett. Buffett's the closest thing we have to someone who's just perfect track record kind of guy. And they are wrong all the time. I would invite you to actually look at Pershing Square's returns before the pandemic, for the 4 years prior. He was meaningfully underperforming, right? So again, Bill Ackman takes shits just like you and me. He sits on the toilet, unless he's a weirdo, right? And he's got 24/7 hours a day. And how much can he read? How much can he predict? It's all judgment. At the end of the day, it's all judgment. So whether it's Chamath or Ackman or Elon Musk or any of these people, they make mistakes. So don't go blindly following anybody. And that includes me. Stop. Seriously. That includes me, right? I wish I had my sign. It's still in Nashville. It's opinions, not advice. It's this one guy's opinion. You don't okay. So I addressed that one. Hopefully it was a little bit entertaining. We're hitting 40 minutes now. We'll go a few more. Let's do Acorns and new. So it's clear you guys are talking about bottled So some of these comments are bottled. I've never heard that term, bottled. Okay, yeah, okay. So it sounds like the voting is an issue on this meeting pulse. So I may, like, it's gonna be part of the redesign, and I wanna start the new content map next week with more video content for ROIC members. So yeah, I'm gonna cancel Meeting Pulse. I think Meeting Pulse is out. I really wish we didn't have to do this. And again, I'm gonna try to meet people here in Miami. There are a lot of software developers here. And so hopefully we can find someone who can help us out, like tech lead for Sense, and can maybe tie voting to ROIC accounts on the website. But if not, for the meantime, maybe, I think it's entertaining, maybe we just do call-ins or something. So is KKR going to make it to the big board? Oh, that one's bottled too? Man, all of these are bottled. I learned a phrase today, bottled. Is KKR going to make it to the big board? Probably on weakness. Probably on weakness. But it's hard to fit this one into our like 2 to 3x kind of thing. So that's why I would love to maybe manage like 3 different portfolios. One is like our flagship, ones are more conservative, and ones are like super high risk, high return one. But for our flagship ROIC big board, it's like we have enough. We have Amazon. Like, you know, I was talking to my friend who just had a big payout from private equity. And I mean, like, we were talking and he ended up just buying like $500,000 worth of Amazon. Right? So, yeah. So, yeah. So, like, KKR is a compounder, but so is Amazon. So, I mean, like, maybe we diversify more, but I feel like, right, like, my base gut is to concentrate us and not spread ourselves out too thin, right? But concentrate us in a way where we are insulated from the craziness of the crypto world. And just to say one more time on the crypto stuff, this is going to look like a little blip on the radar when you average out Bitcoin returns over the next 5 years. Okay? But right now, when we're like in the day-to-day and we're all like tuning in every single day, right? Like, it doesn't feel great when our Bitcoin allocation gets cut in half from the peak. And we're good at what we do. So the stock portfolio has been outperforming and kind of saving our butts in that respect. But like, judge us on the 5 to 10 year view and not on the 6 to 12 month view. It's the reason why I don't love bragging about returns, especially like 6 month to 1 year returns. Like, the big board isn't even 1 year old, right? We started on August 18th. So hopefully this community is here with me for like 5 years, because we're 5 to 10 years, like at the very least, because we're gonna look back and it's gonna look like what I have on my personal life. And like, yeah, like if you looked at my Bitcoin investment over some period of 2 years, like, it's like, wow, Justin, you're an idiot, right? But now you look back over a 5 year return on my Bitcoin and it's like, oh, you're a genius, blah, 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 right? But in reality, it wasn't really like that, right? You all know that. Like, I'm the first to admit, like, I did buy my first Bitcoin at $300, but it's like, it's not like a genius. It's just a probability weighted distribution prediction. So we do that, and the higher the upside, the longer you have to wait, and the higher volatility you have to endure. So with TIGR, FUTU, and Bitcoin and Ethereum, you just have to endure it and have some, how they would say it in Miami now, cajones, you know? So just for that portion, just mentally steel yourself not to get too happy on the ups and not to get too sad on the downs, right? Now, if Amazon fell 10%, I'd be more concerned about that than TIGR falling 10%. Is because Amazon falling 10% probably means there's a huge issue right? Like an antitrust breakup or something really, really structural to the business. But like TIGR has no news and it's up down 10%. Like maybe some investors are following the ROIC community in, right? Like maybe some investors, I have a lot of friends on Wall Street, they're all talking about us and they're like a little snooty, but maybe they're coming in and I don't know. We'll see. We're going to do what we're going to do and not worry about what anybody else thinks. Cool. Viv, you're asking, what do you think of doing when inflation comes? If and when inflation comes, I think that all financial assets are in trouble equally. Maybe not equally, somewhat equally. Real estate has the benefit advantage of having land value, which is anti-inflationary. But it also has a headwind in terms of like mortgages get way more expensive as rates go up. Stocks are really good, but value stocks are best, right? So if inflation is happening, value stocks are best to me, which is why I've been trying to like rotate us into value stocks. But our growth portfolio has done really well. So you can't say I haven't tried, right? Like I tried from the very beginning to try to get us more into value stocks, but it just, for some reason, right? Like we are fundamentally growth investors here. So, I will just say like in that environment, if we are let me pull up this chart. Fed funds rate over time. Let's go to the Fred. I show you guys this, seems like every week, but I know we haven't seen each other in a while. Golden age of value stocks, golden age of growth stocks. Now, that's not don't take too much of that phrase to heart because innovation inflected here as well. So it's really hard to say it's all interest rates here because like the internet was really invented and consumerized here, right? And then the internet is like the greatest invention of mankind's ever seen, right? It's the democratization of information. I mean, back here, people were thinking about flying cars, right? And they thought that this generation thought that the future would look like the continuation of what their innovation was, which was physics and transportation innovation. So they thought flying cars, nuclear energy, they thought energy was going to be free. Now, what they didn't predict was what's actually free is information now. Information and communication and technology and software specifically. But from a financial aspect kind of like takeaway here is if we enter another period of time like this, I think we're going to enter another golden age of value stocks, which luckily for you, it's what I studied. And we'll rotate into that. But I like growth. And also the counter argument is the Cathie Wood argument. And Cathie Wood is sharp with her macroeconomics, sharper than I am, clearly. And she thinks that innovation is naturally deflationary, which I agree with her on. And so you have these opposing forces. This is why no one can really predict it. So that's why I really like where we are on the big board. We have growth stocks that we really love at a good valuation. We have value stocks that aren't like screaming cheap, but they are palatable and are fundamentally super strong and on a super cycle, right? That's what I really like. We are moderate people with rational, thoughtful viewpoints that also want to sleep well at night. That's how I characterize our flagship fund, the ROIC Big Board. And also ones with a 5 to 10 year view. Cool. So it's really great doing this again. I missed you a lot. I can't wait to focus back down. I mean, the conference is fun and everything, but this is what I love doing, right? So hopefully I can look at some stocks this week. You should see what's behind this camera right now. It's like a mess. So we have to really set everything up. IKEA is crazy. We are clearly in a furniture shortage along with everything else. So I'm excited. And starting next week, like, trust me, we have to whiteboard tomorrow about exactly like the schedule, but we're going to be really reinvesting in the content, really reinvesting in the YouTube channel, and trying to just rethink the whole thing. But don't worry, like, it's going to just get even more useful for investors at home who are ROIC members. So thank you so much. Also, I just want to say, if you guys were at the Bitcoin conference and I met you, like the handful of you, like, so great to meet you. It just confirmed my my suspicion that ROIC members are just like really great, smart people, and we're not just like Wall Street bets over here. So thank you. I will see you guys later. Show us the mess. I'm like on a fixed thing, but we'll show you the mess next time. Thanks so much. I will talk to you later. I'm gonna try to get more active on Discord again, get back into the swing of things, and I will see you probably Thursday. I'll probably skip the public live stream as we rethink everything. And yeah, I'll probably see you Thursday, so in a couple days, for a ROIC only stream. So thank you so much. I wish you all well, and don't forget to just we're doing well. So take care. Bye.